Hey, welcome back to the channel. In this video, it's going to be an important one. We're talking about numbers today, and who better to go to than someone who used to be a CPA. Glad that's in my past now. But it's very important to make sure that you know exactly where you stand in your business with your numbers pretty much at all times, especially if you are looking to one day quit your job and live off your income. You need to know exactly how much you need to bring in each month in order to not only sustain yourself, but to continue to grow. So in this video, I'm going to be going over a few different softwares that are options for you to use in your business, which one I've used for the longest time, which one's the best for beginners, and how exactly to track your cash flow outside of these apps to make sure that they're actually working the way they should be. If you're new to this channel, go ahead and hit the subscribe button. The content in this channel is geared toward Amazon sellers at this point, helping you grow a business from $0 to $100,000 a month relatively quickly. Go ahead, if you would, to join the Facebook group in the link below, where there's a free course giving you access to videos that are going to get you up to speed quicker so that you can start your Amazon business today. So without further ado, let's get right into the video. So before we go over the different accounting softwares that you can use to track your numbers, we're going to just cover a few basic accounting principles first, just to make sure that we at least know how to interpret what these software tools are giving us. There are two basic statements you really need to understand, and that is your profit and loss statement or your income statement and your balance sheet. Starting with the balance sheet tracks the accounting equation. It's a very simple equation. It can be boiled down to this, which is assets minus liabilities equals equity. So in other words, if you take all the assets in your business, which should be your cash and inventory at this point, and you subtract out all the bills that you have due to your credit card or your wholesale accounts, whatever's left over, that's what you own, okay? Hopefully it's not negative. If it is, you're in trouble. Now, the income statement, in contrast to the balance sheet, which is essentially a snapshot in time of your business and where it stands at any given point, well, the income statement is a tracker of how you performed in the prior period. So if your period's a month or a year, it doesn't really matter, but whatever's in that period, you will look at that and you'll say, okay, what were my sales? What were the cost of sales? So the cost of all the inventory I sold, the cost of all the expenses in that period, such as rent, poly bags, tape, utilities, internet, things like that. And when I subtract all of that from the revenues or the sales in the same period, what is the profit for that period? As time goes on, hopefully each month you're having a profit. Well, those profits are being captured now into your balance sheet in the form of retained earnings or equity. So it's going to increase as you have more and more profits. Your equity will go up and up and up. And whether you choose to reinvest your cash into inventory, your assets will be either more cash or more inventory. If you choose to grow your business, then your debt may go up still, and your income hopefully will then increase as your debt goes up and your equity goes up. Hopefully you're following what I'm saying here. The next statement that's very important is your cash flow, but we're not really going to cover that right now. We're going to first look at the softwares that you can use to track your numbers, and then how you can manage your cash flow using those apps. So let's get into that now. There are several different accounting applications for Amazon sellers, but in this video, I'm going to focus on the two that I consider to be the best. That is Fetcher and Quickbooks. Now, if you're a new seller, I highly recommend starting with Fetcher because it is hands down the best sales feed software for Amazon sellers, period. Even if you already use QuickBooks, you should probably keep using Fetcher. And the reason being is that Fetcher allows you to look at each SKU, determine its profitability and the amount of sales over a given period of time, and you can use that information for your repurchase decisions. Not only that, but Fetcher's super easy. It allows you to download all the costs for each SKU into an Excel file, which makes your reconciliation back to Amazon extremely easy. Now, I'm going to show you how to do that in a few minutes. But the important thing to realize about the downsides of Fetcher is that it does not generate a balance sheet for you, and it does not generate a cash flow statement for you as well. These you have to do offline on an Excel spreadsheet. And if you're good at Microsoft Excel, it's not that much work. Now, that is the reason you would use QuickBooks. QuickBooks generates a balance sheet, it generates a cash flow statement because it links up to your bank account and your credit card companies, feeding that information into QuickBooks automatically. This is something Fetcher does not do. Not only that, but to get an accurate P&L or income statement with Fetcher, you have to add in certain costs manually, aka costs that are non-inventory, such as rent, utilities, internet, polybags, tape, stuff that doesn't feed from Amazon. You have to enter that manually to get an accurate profit number with your income statement in Fetcher. This is not true for QuickBooks. It will come in automatically from your credit card company or your bank, however you pay those items. Now, the other plus for using QuickBooks is exactly what we talked about before with it connecting to TurboTax. So real quick, let's look at how you can use Fetcher to track your cash flow and determine if you are making enough money each month to sustain yourself. So here we are in Fetcher looking at the profit and loss statement. Now, this information is the only information that we will need to use in order to construct the balance sheet and a little simple cash flow analysis for our business. Now, there's other tabs on the side here where you can see the individual sales for each one of your SKUs, the individual profitability. It's all great information for repurchase decisions, as mentioned before. But for the time being, we're gonna go ahead and construct the balance sheet and our cash flow analysis. So what we're gonna do is we're gonna go over to a spreadsheet that I have created. And by the way, if you join the Facebook group in the link below in the description, you will get access to this template for free in that group. So what we're doing with this template is we are trying to determine what our balance sheet is. And how we're gonna do that is by recording all the purchases we've ever made from all of our distributors, the cost of sales from Fetcher. We're gonna input that for all the months that we've ever been selling on Amazon. And then there's some other information in here, such as the reimbursements that we get from Amazon, and we're going to take out the margin of that and add the cost of the inventory related to those reimbursements back into our cost of sales. So I know that's a mouthful for you, but hopefully over here I'll be able to explain. So in column B, you can see we have all the purchases we've ever made. Right below in row 6 in column B, we have all the costs we've ever incurred from our inventory that we've sold, so the cost of sales per Fetcher. In row 7, we have the costs related to the inventory that has been lost by Amazon that we receive reimbursements for but haven't sold. And then in 8, we have all of the disposed inventory, so whatever we bought from our distributor that maybe we didn't send in, that just we disposed of and we didn't get reimbursed by a distributor for. Finally, here in row 9, we have pending sales. So sales that are pending, we haven't received the cash from Amazon for yet, so we want to add this back to our inventory and not include it in the cost of sales for this analysis. So what we are doing here is we're going to take our purchases, subtract the cost of sales per Fetcher, we're going to subtract the reimbursement cost of sales, we're going to subtract the disposed inventory, and then add back the pending sales or the cost of pending sales, right? And that total is going to be our inventory balance. So you can see here, subtract, 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 and then add, just as I mentioned here. So that gives us our inventory balance. And then what we have is our cash balance, our Amazon balance, and that gives us our total assets. And then in our liabilities, we're going to put in our credit card balances and our distributor account balances. Once we do that, we're going to add up the liabilities and we are going to then subtract them from the assets, and that will give us our equity. To track your income, you are simply going to perform this analysis every month and compare it to the prior month. So whatever my equity was in the prior month, however that's changed over the course of the month, that will either be my income or loss. So if my equity has gone from $698 to $1,698, I have made $1,000 in net income or in profit during that month. And that I should tie back to Fetcher, and hopefully they are very close in value. If not, then there's some kind of problem, either with Fetcher or something's missing at Amazon or something in your equation is wrong. Now on this part of the spreadsheet, we're going to track our cash flow. As you can see in column C, we'll have our cash balance. Column D, we'll have our Amazon balance. Column E, we're gonna have the total inventory, and F, liabilities. Column G is gonna be our cash balance plus our Amazon balance minus our liabilities. And then column H will have our credit account balance due this month. Now, as time goes on and you get more and more data values, you will understand exactly how large of a credit balance you can have due this month versus the amount of cash and Amazon balance that you currently have. So you won't really know what the meaning is behind these numbers until you begin selling, but this is a way that you can track it. And obviously the goal is to make sure you have plenty of cash each month to pay your bills. And then here you can see how much more cash you could have spent on inventory so that it wasn't sitting doing nothing. In other words, you're turning your cash quicker. It's not just sitting there. So this spreadsheet will help you track your cash flow, and over time you'll get a great idea of exactly how much money you can invest in inventory every single day and still have the cash back in your account at the end of the month to pay your bill. So here you have it. This is how I use Fetcher and spreadsheets to track not only my balance sheet, but my cash flow and my income reconciliation. Now, this whole step of creating your balance sheet and tracking your cash flow manually is something you could avoid if you use Quickbooks. But like I said, once you transition to Quickbooks, you no longer have the sales feed that Fetcher gives you, which is great information. Now that brings me to the conclusion of this video, which is how much cash flow should you have, or how much should the equity in your business be before you can quit comfortably? Well, that all depends on the amount of expenses that you live off of. For me personally, I was living off of around $3,000 to $4,000 each month. And so I found that when my equity got to around $100,000, my inventory balances were consistently above $100,000, and my cash flow was about $10,000 to $20,000 positive each month. In other words, I was bringing in $10,000 to $20,000 more than what my bills were. I could live comfortably and continue growing my business. So it's going to be different for everyone, which is why you need to track your cash flow. If you're using Fetcher and you're new, I suggest using the spreadsheet that will be in the Facebook group, which you can get access to if you join in the link below. Or you can also track these numbers using Quickbooks, which you have to pay a little bit more for, but is another way to learn exactly how much you need in order to quit your job. Now, as promised, in the last part of this video, we're gonna go ahead and do a reconciliation of our inventory at Amazon to make sure that that inventory balance that we showed you in the spreadsheet is actually what we have and isn't some fictitious number that the spreadsheet is giving us. So what you're gonna do is you're gonna come over to Amazon, you're gonna go to the reports section of Amazon, come down to fulfillment. Once you're here, go over to the inventory section of this page here on the left-hand side, and you're going to click on the Manage FBA Inventory section. Here you're gonna download today's inventory. So it's gonna give you everything that you have in inventory for that day. And once that's downloaded, you're then gonna go over to Fetcher, okay? You're gonna come over to Fetcher, and you're gonna go into the expenses section here. I'm gonna blur everything out so you can't see it here. But right here, you're gonna download this template. Now what you're gonna do is you're gonna use a VLOOKUP to pull in the ASIN from Amazon and match it to the ASIN here on Fetcher, and pull in the cost for that ASIN on Fetcher to create your reconciliation. To explain how this works, I've created a spreadsheet where you're gonna dump your Fetcher and your Amazon data. So your Fetcher data is gonna come in this format. You will have columns A through F, and I've put in some dummy data here just to use as an example. Now over here where the gray box begins, this is your Amazon data. these are the fields that you will have when you download that FBA inventory report. Now, these columns right here I've added. So G through J I have added. What this is doing is this is creating a VLOOKUP, which is taking the cost according to the fetcher data, and it's looking up that cost based off of this ASIN right here. So CC, it's taking that, it's trying to find in here, all right, where's CC? There it is. Okay, bring me the cost for CC, right? There it is, $15, okay? Now what I'm doing is I'm manually inputting inventory that's not at Amazon. So whatever dollar figure you have that's not at Amazon for that particular SKU, in this case, or ASIN, in this case, ASIN CCC, you're gonna put that dollar figure right here. And then right here, we have the total Amazon quantity, which is, if you take the AFN total quantity and you subtract from that the AFN inbound working quantity, so I'm subtracting column Z from column X, you can see that right here. Sorry, you can see that right here. That gives me my quantity, so I'm just going to then multiply my cost times my quantity and then add $100 to that. So you can see that being done here. And that is the value of my inventory for ASIN CCC. Now, this you're going to do for all of your ASINs. It's very easy. All you have to do is download those reports and copy and paste them in here, and it should automatically populate all of this except for the manual input part. You're gonna have to do that yourself for the stuff that you have not yet sent to Amazon. That will give you your inventory value in column J, so you have to sum up all of column J, and you are then gonna compare that amount to your inventory balance here on the balance sheet. Hopefully they are somewhat close. If not, you have a problem and you need to figure out where the missing inventory is. So there you have it. That's how you do an inventory reconciliation using Fetcher and Amazon. Hopefully this video has been helpful to you. If you liked it, go ahead and hit the subscribe button. Once again, join that Facebook group, which is in the link below, and we will see you next time in the next video. Thanks, guys.